Hey traders, hope you all had an awesome weekend. So quick one here on nat gas, gold, silver and crude oil, and starting with natural gas. So what do we have right here? So first, let's look at the zone below on all three platforms, and then I'm going to talk about what to expect next from here. So the zone here on capital.com, it is right here, 1.573 that goes to 1.676, a massive zone and an area from where we can get a possible and a big bounce out of. Now, as you can see, the zone has now been broken, and once the zone is broken, we use the upper level that is recently broken as our trend continuation zone, bearish, as when the price pulls back to the zone, and then we will start to look for the sell trade. Still we are in the zone below. The zone above that is recently broken. It is 1.819 that goes to 1.909. A level that has been recently broken has turned a level of resistance. Now personally, I would like to see one more red candle, a daily candle closed below, to call it a major level of structure resistance. And then I'll go back on 4-hour time frame to look for my entries. Now the zone here on Owanda, it is broken recently, which is 1.959 that goes to 2.059, a zone that has been recently broken, and we already have a good momentum below this zone. I'm going to talk about this candle in a very short moment. Now the zone below, that is a major structure support. It is 1.476 that goes to 1.645, a zone from where we're going to look for our buy counter trades. Right here on NEMEX, the zone below, it is 1.467 that goes to 1.597, and the zone that has been recently broken, it is 2.018 that goes to 2.169. So these are zones you need to plot on your charts, and now let's analyze the charts and what to expect next from here. So as you can see, we had a big bearish momentum and the zone has been broken, and now I've already mentioned in my yesterday's video that we're going to look for our buy trades from this area of value. So at this point, if you remember, this was an invalid engulfing pattern here on capital.com, as the candle closed opens above previous candle makes it an invalid bullish engulfer. It must fully engulfs the red candle with the body. And here on NEMEX, we had a zone here before, but I've removed that, but it was also an invalid bullish engulfing pattern. As you can see, the candle opened above the previous candle. Now here on Owanda, we had a valid bullish engulfing pattern. If you were already in the trade, that would have been stop loss hit, but we had a price breaks below but then closed back in the zone. That is why it was a weak entry, and fortunately I did not enter this trade because that happened on Friday, and I've tried to avoid trades on Friday and not to hold my commodities trades on Friday, but that would be a valid bullish engulfer. But now, as zone has now been broken, what are we looking at? So if you remember, the Fibonacci entry we took right here for aggressive entry, for aggressive traders, all you need to look at, pull up your Fibonacci tool from low to the high of this zone. First, all you need to look at a pullback. It is likely that price will push up to 50% retracement. Now 25% to 50% retracement is my buffer area from where I expect a good push down. Now for limit orders, you can either set up your order at 50% retracement and then go 180 or manage it till 1.618 retracement, which is right here, and take profit 1, which is 180, and take profit 2, that was 1.618 retracement. If you remember, in my previous video, when the zone was broken, we entered our trade at 50% retracement, which is right here, the entry triggered, and then the take profit 2, which is 1.618 retracement, has been hit. If you are managing your trade, that was clearly mentioned that if you want to manage it, this is the level till where you can manage your trade. Now we had another zone broken, and now we can plot our Fibonacci tool again, and which is something like this. So at this point, from this current candle, if we see a pullback, we can keep a Fibonacci tool like this. And now aggressive entry will be a 50% retracement, which is right here. Take profit 1 can be 180 and take profit 2 can be 1.618 retracement if you want to manage your trade. And that is an aggressive way to enter your trade. Now a pullback entry that is between the zone, and we are only looking for a pullback entry bearish. Now this is an invalid bearish pullback pattern. In case you are wondering, we are not looking for this trade. So for now, for the pullback entry bearish, I want to see a pullback of few candles, and wherever we get a pullback till, but it must be below 50 EMA, and once we have a pullback followed by bearish engulfer, in that case we are good to go short and keep on taking shots till we are in the zone below I've already mentioned at the start of my video. So only looking for pullback entry and keep on taking shots if you're looking for entering in a less aggressive way. Aggressive entry I've already mentioned with my Fibonacci tool. Now an aggressive entry from the zone, which is right here, I've already mentioned, will be a hit of the zone and a bearish engulfing pattern or a double top pattern in this zone, inside the zone, or once the price hit this zone. In that case, that is also one of my entry reason to take my sell trade. So these are the conditions for sell only, as now we are trading below 50 and 20 EMA. We are broken below the zone and we are only looking to enter buy trades from this area of value. I've already mentioned with bullish engulfers or double bottom entry pattern. Hammer candles, 382 candle bullish will be my entry condition if the price gets to this level for my sell trade. Now if we get a big pullback, you don't need to get alarmed. We can still get a pullback till 50 EMA and we can get a possible rejection and we can get a trend continuation towards the downside and price can likely make another low. So as long as we are below 50 EMA, we are only looking for sell trades with the condition I've already mentioned. If broken above 50 EMA, let's say we have no sell condition or we have a sell condition and price is pushed up, in that case if we are broken above with a good momentum, only then I will look for my buy condition or from the area below in green. So these are conditions you need to look at carefully. Without a condition, we are not entering our trades. We are now in a bearish momentum, a strong bearish momentum, and price is broken below. We have a strong bearish pressure. We are broken below this zone, only looking for sell trades with conditions I've just mentioned. Now here on capital.com, exactly the same. Let this candle closed first. Let this 4-hour candle close first. Also forgot to mention, if we have another red candle, let's say close below, then you use the next candle for your Fibonacci entry, which is from the low of your candle till the zone right here. If you get a pullback, if your pullback started from here, that is fine. You can still keep this current candle. But if you have next candle again, as long as you're getting red candles, you can move your Fibonacci tool below until you get a pullback. You start to see 1 or 2 green candles, and then you don't need to move your Fibonacci tool. So as long as we're getting red candles, we are keep on moving our Fibonacci tool lower. So here on capital.com, exactly the same. Let this candle close first, and then from the current candle, 50% retracement will be your sell limit order. Take profit 1 can be 1 ATR, whatever the ATR is, and take profit 2 will be 1.618 retracement. Rest, all the entries I've just explained on Ovanda, you look for that. Once we have a condition, we are good to go short till we are in the zone below. I've already mentioned, once we are in the zone below, only then we are looking for a possible counter buy trade with bullish engulfers and double bottom entry pattern. As now the zone is broken, the next buy trade will be only from this level, or if we have a dramatic push up above 50 EMA, only looking for sell trades with conditions. Here on EMEX, I've already marked the zones. All you need to do, plot your Fibonacci tool for aggressive entry, which is right here, and all the conditions are same. I've already mentioned, keep looking for that until the price is in the zone below. All we are looking for a pullback entry bearish for less aggressive way, or if we have a hit of the zone above that is recently broken, in that case we will have an aggressive entry from the zone with bearish engulfers or double top entry pattern, and buy trades will be only from this area with the conditions only. So these are the conditions I've given to you. Look for that. Once we have the conditions, we are good to go for our trades. Next one, we have gold. Gold is now pushing lower, and as you can see, still ranging in the sideways. I've already mentioned these zones in my yesterday's video. If you're wondering, the zone here from where we can get a possible bounce if we get to the zone, or from where we can get a possible drop if we get to the zones. Now the only two zones I'm looking for my counter trade is one below, which is right here, 1972.87, that goes up to 1987.82, and the zone above, which is 2070.99, that goes up to 2077.13, a zone from where we can get a possible reversal if we push up after the consolidation and a breakout, or if we break below this box. In that case, I will look for my buy condition from this area of value with bullish engulfers, double bottoms with bearish engulfers, and double top. And these are the conditions I'll be looking at once we are in the zone, either of the zone from a buy or sell trade. For now, we can just get a range in between this area and a possible bounce from here till this upper anchor level, and the possible pullback from this upper anchor level. So these are the conditions now I'll be looking at. Only looking for the breakout. From once we have a breakout, only then we start to look for the next trades for gold. Here on silver, the head and shoulder pattern has been played out, and if you are my student in MMTA course, a good example, a head and shoulder pattern, I've already mentioned that in my Discord group as well. We had a push up right here right from here and take profit. One has been hit, which is 1 ATR. Now if you are still managing a trade, I'm expecting a price to head higher till this anchor level 23.31 that goes up to 23.52. Now the entry number 2, if you have learned the lesson, will be a break above this box. In that case, a break and close will be your entry number 2, and the next zone, if the price pushes up hard, then we have 24.26 that goes to 24.66, from where we're going to look for a reversal and sell condition with bearish engulfers or double top entry patterns. So these are conditions now I'll be looking at. We are now above 50 and 20 EMA. I'm now expecting a price to push up at least this anchor level, and then we can get a possible pullback and a possible break above this anchor level to this red zone, from where we're going to look for our sell trade. So silver is bullish. I'm expecting a price to push higher. Last one, we have crude oil. It's now pushing up, and the zone above is 78.06 that goes up to 79.97, from where we can look for our sell trade with bearish engulfers, double top, inverted hammers, 382 candle bearish from and inside this red zone. If you are wondering, it is not a valid bullish engulfer, and it is also not a valid bullish engulfing pattern. But once we are broken above this wick, I'll start to look for another pullback entry with a bullish engulfers till we are in the zone here to take my counter trades for sell. So these are conditions now I'll be looking at. Crude oil is still bullish, as now we are above all the EMAs and only looking for buy trades till we are here to take our next sell counter trades. So that's it for commodities, guys. Hope you're getting value out of my videos. If yes, hit a like button for me, subscribe if you're new, so that we can all trade together and trade efficiently. Hope you trade green rest of the week. See you guys in the next video. Till then, take care.